What a wild day, and we thought the news was going to just be the FOMC, and it turns out that that was hardly anything in comparison to what we really saw happen with the Senate. And we're going to dive some real detail into this today. Super important concept here to get a theme that I think is going to basically change the landscape and get rid of a couple stalwart companies. I actually think it's going to put them in real jeopardy. I've seen this play out before with different technologies, and I don't think people are getting it. What I want to lead with is not only that, and of course what the Fed did today, which was nothing, and he had a real tough job to do today. This December 18th bar, we're just unable to do anything here. And until we figure out what we're going to do here, I really think you need to be super careful of this. And we're leaning towards one kind of market. We're going to dive into what that is. Let's jump into it. As always, subscribe to the channel, click all notifications. Let's do it. You would think that the most important thing in the market today was what happened with the FOMC, and it is really important. But what is most important to me is that we are not understanding what this tokenization is going to do to the world. We're not really getting it yet. And quite frankly, I don't think the market's getting it. I think it's starting to understand it, but you can see where these names are. And I really want to cover this in some detail. I was going to do it on Saturday, probably in greater detail. But we have the time, so we're going to do it. And the way coin's moving and the way Circle's moving, we can argue whether or not the valuations. But I do think that coin could be extremely disruptive here to a lot of stalwart industries. And quite frankly, you could actually argue that it should have been up even more. Let's get into it. Now today, Coinbase surged about 16%, new momentum from this landmark crypto bill. And we're just going to rip this from the headlines. You can see the date right here. Coinbase stock surge Wednesday. Crypto bullishness jumped in after the latest policy developments. Coinbase and other crypto stocks rallied after Congress passed a big bill aimed at stablecoins. Big word. Circle stock also soared, ending the session up over 30%. Shares of Coinbase spiked on Wednesday. Largest U.S. crypto exchange riding a wave of bullishness. Senate passage of Genius Act this week. Now, what exactly does this do? It creates the ability by the Senate to pass Tuesday aims to establish a regulatory framework for stablecoins, ultimately paving the way for their more widespread use by issuance and more companies. Very important to get this. And Circle obviously has something to do with it as well. Meanwhile, shares of recently public stablecoin issuer Circle gained 34%. Okay. And this breaks down what they are. Stablecoins are a crypto intended to hold their value steady against fiat money like the dollar. They're backed one by liquid reserves, meaning you have to have the money there. It either has to be dollars or it has to be treasuries. So when you're doing it, it's either dollars or it's treasuries. So you know what you're backed by. Stablecoins are Coinbase's second largest revenue driver. Stablecoins are Coinbase's second largest revenue driver, directly behind crypto trading. Its first quarter earnings showed, but the company's exposure to the stablecoin market is even higher. Coinbase is a co-founder of USDC, popular stablecoin, receives 50% of the residual payment base that its issuer Circle generates from the reserves. Circle recently made its trading debut, blah, 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 blah. So pay attention to this. This is the really important part. Coinbase is a co-founder of USDC, a popular stablecoin, and receives 50% of the residual payment base that its issuer Circle generates from its reserves. Now, the momentum from Circle IPO is ebbed. I don't know what they mean by ebbed. The thing's absolutely rocking. But this Genius Act is a big deal. Stablecoins have received even support from the president. And guess who has their own digital asset firm launched its own stablecoin earlier this year? Circle's big IPO success is an indicator that Wall Street has begun taking stablecoins and the broader crypto space more serious. This is one of those inflection points. And somebody said something to me tonight, and it's really true. And I want to hammer this point home in a second here. We're going to bring this thing all together. Jamie Dimon has been vocal cryptocurrencies, but this week, guess what they came out with? A stable coin for institutional clients. I want you to think about this for a second, but look at this article that happened 2 days ago. I think it was yesterday or the day before. Coinbase is currently seeking approval to offer tokenized stocks on its platform. Trading revenues is in talks awaiting green light by the U.S. Securities and Exchange Commission. They're going to tokenize stocks. You're going to trade stocks. You're not going to actually trade the common stock. You're not going to own the common stock. You're just going to tokenize it and you're going to trade it on Coinbase. This was 2 days ago. I believe it was 2 days ago. Coinbase chief legal officer, thus crypto exchange might expand new line of business, compete with Robinhood, Revolt, similar platforms. So what's so interesting to me about this is not even all the other things that they're doing, but Coinbase is basically saying, we want you to be able to trade stocks here, but we want to do it so much faster and so that you don't have to wait at all for your money to kind of turn over. And this is going to be super interesting with the PDT rule and how they're going to get around this. I'm wondering if they're going to get around this for the smaller guy. But what's interesting about this is they're just basically saying you're going to trade a stable coin that's going to be tokenized. And then what you're going to do is you're going to sell that stable coin and then you're going to buy a tokenized equity coin. So they're going to make money off of all of this every single time. that you're flipping these things. Every time you're moving into something else, they're going to make money off of it. I don't think people are truly getting this yet. Reuters, tokenized equities have become a top priority for the crypto exchange. Product would also allow gain users exposure to U.S. financial markets without directly purchasing or going to the requirements to buy a stock. Without directly purchasing, this is a really important part of this. He's the chief legal officer, so he's choosing his words very carefully. Without directly purchasing or going through the requirements to buy a stock. Okay, so if PDT is a requirement to buy the stock and you have those rules against you, or other rules for the smaller broker, are those rules going to be the same here if you're doing tokenized equities? I don't have an answer to that, and I'd be really curious if somebody does. But those words are chosen very specifically. Instead, users would hold tokenized version of these assets. Coinbase and other companies in the legacy crypto industry are keen to offer these products on board. Reduce costs, provide faster transactions. If the transactions are faster and the settlement's faster than what the settlement is on the SEC and on the exchanges, what does that actually do to the requirements? What's that do to margin? There's a lot of questions here, and I don't think people are getting this side of it and how this could upend everything. But take a look at this. Walmart and Amazon are reportedly considering their own crypto stablecoins. Don't need Visa? What about just using stablecoins when you're at Walmart? What about taking your cash and they're converted into stablecoins at Walmart? What about Amazon and they're converted into stablecoins? Guess what you don't need anymore? You don't need Visa. You don't need MasterCard. You just need the capital. That's all you need. You take the capital, you go there, you buy stablecoins. This is really fascinating because it really not only upends that industry, but the speed and the speed of payment is going to be so much faster to the end user in the business. They're not going to have to wait for their capital the same way. Their capital is going to move a lot faster. That's going to help with a lot of things. And this alone, I actually think could speed up GDP, quite frankly. I think there's got a lot of capabilities here, but here's the thing about it. It definitely is going to hurt certain names, and it is definitely out there that people are not getting this yet. One, because it just started happening starting this week. But I don't think people understand the ramifications of this. Now, if we look at when this started, which is back on the 13th, obviously this IPO went crazy, but Coin right here, you're up 24%, Affirm still up, XYZ, PayPal, Visa, MasterCard. They're hanging in there a little bit, but not really. Now, let's take a look at something else. What we have in front of us right now is just Circle. And when we see how this looks right there, and you see the breakout, let me show it to you this way. We can see that break right here, see it? And once you saw that, and then on top of this, watch the volume. You just knew it was gone. I'm going to show you this live. I currently have a position in this. I also have bought calls on it, and I actually have sold puts to open, so I get the premium that is paying for the calls. I'm probably going to do that in a more advanced video down the line. On post these, I plan on doing something like that. But the important part about this is how to enter the trades like this, and then how to stay in them. And this gave you every opportunity to get involved in this from a day trading perspective, but also hold this. And then when the news came out on what Coin was really looking at doing with all of this, that's when it got super interesting. And I'll explain that in a second, but take a look at this. Watch this trade. That circle is going to squeeze people. They just hosed a bunch of people there. See that bar? That's painful. You're like, I knew it. I'm so smart. You'll know nothing and like it. Oh, here's $10. And then you're like, oh, I'm just going to hold it. Like that's the whole process, the thought process when you think about the other side. You really have to use like 54 as the stop. They're going to rip people's faces off on that. Look at that. You're going to form a little thing right there. You call it dragonfly? I call that awesomeness. But don't do it. Don't do it. Cut half. Holding the rest. I'm going to hold the rest for a little bit here because I think you're just going to reverse and go right back up. And I'll add to it. Bought more. It's not going to cost me much for me to lose $1 where you can make 10 in like minutes. Trimmed. 59. Trimmed. Boop. Trimmed. Stop on the rest on 57.10 is my cost. I'm just leaving this on. And when the break even hits, I'm not going to try to keep getting in and out. It's exhausting. Flip that level. So 66 is on the table. Circle 160. I've done nothing with the rest. I'm just letting it win. Circle new highs. Circles just continues to make money. Nothing for me to do. 64 is the target on that. 65.90 rather. Now, that was one of multiple trades that we've done in this name, and I'm marking a couple others off. And I might do a full video on all of them that we did today and why we got in and why we got out where we did. I do plan on doing more videos specifically about content that has to do with, you have to understand who you are as a trader. Like not everybody is going to be able to handle 57 to 83 back down to 75. Like not everyone's going to be able to handle that. So we're going to do some more videos on that, how you handle who you are as a trader, identifying who you are as a trader. It's super important to get these concepts. People think that it doesn't matter. It matters. The more you work on yourself, the better you're going to be as a trader. Believe me, I've been doing it 26 years and it took me, the first five to figure that out. But really important concept here, guys. I want to show you this. And this is when it flipped. And I'm not going to get into, this is when coin flipped. I'm not going to get into all of it for time's sake. I may in Saturday's video comment if you want me to get into greater detail about it. But what happened, you started getting these little levels where you started holding. And then if you flip down here, you'll see this reversal right in this area. And it looks like it's going to go again. Well, this is when it comes out that they're going to be looking at becoming a processor. So what people really didn't understand by this whole move is, oh, that's good. They have more stable coins. They make money. You saw their agreement with Circle. But then out of here, you start getting this pendant. And I refer to them as pendants when they go down like this, whether you think they're flags, whatever, call it a blueberry. But when you started breaking out here, people didn't understand why it kept moving. The reason it kept moving is they're looking at becoming a processor. Now, we've all seen this credit card they just came out with in the fall that they're doing what with? They're going to allow you to get up to 4% back on your credit card in Bitcoin. You should look at this because where they're going with this is they're going to compete, and they're going to compete with the Hoods and the Schwabs of the world, but they're also going to compete with the payment processors. And their ability to compete with the payment processors is going to be unparalleled because of their arrangement with Circle. And I'm not going to get too into all this, but I will say that when you start identifying these themes, this is where you can make money. And it's not just the trading side that you can make money on. And everyone knows that this is how I look at the market. We're going to clone this a couple times, and we're going to go old school here. And what I want you to get by this is that, let's just grab that sucker right here and do that one there. Great. What I want you to get by this is here. We all know that that is the fundamental leg of the stool. That is the macro. And then from here, that is the technical. What a lot of people don't understand about the fundamental side of that is when you truly understand these themes, it gives you more conviction to hold these names. And I'm not saying blind conviction, but real conviction. Like, oh no, I know it cold. Like when you know the story cold, it's very different being in a name. And I can't stress that enough. If someone had to say, well, what's the difference? Like, why are you able to hold something like this? Or when I bought coin today, why am I able to stay in that trade? And I compartmentalize my accounts. That's another way that I do it, which makes me not have to stare at it every freaking tick. But it's understanding the story so cold that you're basically going out there and go, prove me wrong. Tell me where I'm wrong. This is how you're able to stay in names like NVIDIA from 38 to 140 and not blink an eye and go, well, AI doesn't exist without it. So show me what I'm supposed to do. Now you're getting competition. We had 4 hamsters here in one chip when we got deep-seeked. But you know where I'm going with this. When you understand the story, you're done. This when all those morons were out there telling you CoreWeave, right? CoreWeave was bad. Remember those guys? All of a sudden they got real quiet, didn't they? Right? CoreWeave's bad, right? CoreWeave was some kind of scam. Okay. So when you understand the story yourself and not just because you read a tweet, that's going to keep you in these names. I can't stress enough to start doing your own research. This was actually something funny enough that we put out 2 days ago in the community, in the private newsletter. Like, obviously we didn't expect that they were going to come out and change the processing world, on a Wednesday into the FOMC. Where I'm going with this, now that you understand, you'll understand why Visa's down, because you're not going to need them. They're not the only game in town. Why do you need MasterCard? You're not going to need them. You're going to have tokens. They're not going to have the same place. Not only that, but here's the other side of it. You now have competition. So if you have competition, that alone just kills your margins. But when you have a better product, and stablecoins are actually going to be a better product when they're up and running, these companies are going to have a lot of problems. Now, most people are going to come out and say, well, I don't see that. When things are disrupted, the things that get disrupted are the things that you didn't think were going to get disrupted. I'm going to say it again. The things that get disrupted when there is disruption are the things that you don't think are going to get disrupted. So like when you thought back in the day in 23, when we talked about KRE and KRE was blowing up, and all of a sudden we had to worry about all these office spaces. Remember all the office spaces? They were all going to zero. They were going to have to knock all the buildings down in New York. It was going to be a disaster. All these buildings. What are they going to do with all those buildings in New York? I don't know. Maybe they're going to rent them and make a fortune. So, from here, 13 to 40, when you start looking at where these names went to, SLG, this thing was trading at $28, 50 cents on the dollar. Japan came in, bought 50% right here. Right? No, that was back here. Back in the day. I got to get my charts ready. Right here. Remember when this popped up? And if you go look at this bar right here, it's when 245 Park, they sold 50% of it, 245 Park for $2 billion. Book value, I think, was 65 at the time. This is when it, once you understand the story, whether it's New York stock, New York office real estate, or whether you're understanding stable coins, it allows you to stay in these trades longer. And as long as they're doing what they're supposed to be doing, there's no reason to move them. You just allow them to work and you let the volatility work either in your favor or out of your favor. There's nothing to do with it. You just allow them to continue to work. That's a very important concept. If someone was to ask me, how are you able to stay in these trades for a very long period of time? I understand the concepts and I understand the process, and I put the time in to do it. I do. I really put the time in on this. I'm spending time on it because the more I think about it, if you take the one thing from this video besides the patterns and the process, it's that. It's understanding the process so well that, yeah, go poke holes in it so that I know where I'm wrong, so I can make my thesis either better or you can just diffuse it. Now, we will cover this greater on Saturday, but I do think it's important just to cover this. You're not getting anywhere near the 450 on the 10-year Treasury. You're staying right where you are at this particular time. I think this is super, super important to understand. You're not breaking down. Please understand that's a really big deal, that they're not selling bonds on the fact. And Jerome basically came out and look at what's going on with the dollar. I think this is super important. I also think the Genius Act is going to create more demand for the dollar, quite frankly, while we're on the subject. But you're getting some stabilization in the dollar and you're getting the need to buy bonds. Really important, because if we can get that stabilization, then the equity market can find stabilization. Now, we didn't fall apart today at all on the SPX. We just kind of went sideways. And if we look at this again from a future standpoint, just take a real quick look here. Let's clean off our levels. Let's drop this to a 5. And let's just look at what happened. We're just going to go to that 12 to 11:30. And what we're going to do before that is there's the open. And then here's that 7 o'clock level. We got a little news there from Iran. And then we're just going to mark the high of this right here. And what I want to do is just go to here and just open this up and go, okay, show me the 830 bar, which is right here. And right in there, what happened? Well, that's when we got the non-farm, or the unemployment data. And you have the 4-week, which is really high. And then we did the undercut. And then from there, what did we do since it opened? We just ripped, absolutely ripped. And what did they do all day? Sold us straight down. 45-degree angle, sold us down. And then what happened in here? We know what this is. I mean, you know, this is when they speak. This is when the dot plot came out. And I will cover this in greater detail. But I think it's important that you have a lay of the land. This is when he started speaking. And I'm going to say something we did hold. And I think that's really important. But take a look at the NASDAQ and what happened with the NASDAQ. The NASDAQ was very similar, wasn't it? It's not a lot different. You would think that what you're seeing in some of these names would have it a lot different. It's not. And this is what's so important about where I'm going with this and where we're going to cover this in even greater detail on Saturday. It's going to become the themes. This is going to become a stock picker's market. It's becoming very clear. And if you don't have the right themes, you're going to have an issue. I really think he had a very tough job today. And I know people, it's funny because in the room I get these DMs from people, and a lot of them today were, oh, you know, he hates Trump and that's why he's doing this, or, you know, he should do this. And you know what? He's going to do what he wants to do. And I'll say it, you guys can comment on it. I don't know how he's supposed to cut rates into an environment when we don't even know what tariffs are. And I know people like look at him and think that he's doing it because he's trying to hurt Trump. And I don't really believe that. You know, I'm not saying that he's the best. Everyone knows, if you listen to these videos, that I'm not a huge fan. Remember December 18th, I cut rates. Why'd you do that? I don't know, right? He had no idea why they cut rates here. But here, everybody's in agreement to hold. Why? All we're doing with these tariffs is we're kicking them down the line. We're not solving anything. And in and of itself, this becomes an issue. A matter of fact, Goldman actually thinks that tariffs are going to lead to more inflation coming into the third quarter. And that's something we should probably cover on Saturday. That is it.